Hey there! So, you're starting a new job in the UK? That's fantastic news. But let's talk about the one thing that can cause a bit of a headache right from the get-go, your tax. The team here at Pro Tax Accountant put this guide together because, honestly, getting this stuff right from day one can save you so much stress and, let's be real, a lot of money. It doesn't matter if you're a new employee, juggling a side hustle, or taking the plunge as an entrepreneur, we've got your back. Let's dive right in.
Okay, I want you to look at this number, 2,200 pounds. What's that, you ask? Well, believe it or not, that's the average tax refund for UK workers who've started a new job and ended up overpaying tax. According to HMRC's own data for the 2025/26 tax year, they're sitting on millions in overpaid tax from people just like you.
And that leads to the really big question, doesn't it? Could some of that money actually belong to you? The chances are, frankly, surprisingly high. That shock you feel when you see your first payslip is a very real thing. But the good news is, it's almost always fixable. Over the next few minutes, we're going to walk you through exactly how to check, correct, and really take control of your own tax situation.
So, here's a quick look at our game plan. We'll start with that first payslip shock, then get into how to master your tax code. We'll tackle the tricky world of multiple incomes, and then we'll look at making the leap from employee to entrepreneur, including the tax kit you'll need. And finally, we'll wrap it all up with the most important takeaways. All right, section 1, that first payslip shock. You know the feeling. You get that first paycheck. You open it up and you just think, where did all the money go? It really all comes down to understanding those deductions. Your employer uses a system called PAYE, which stands for Pay As You Earn, to take out your tax and national insurance. But how do they know how much to take? Well, that all comes down to your tax code, and that's exactly where things can go wrong right from the start. And here's a little did you know for the 2025/26 tax year that is absolutely crucial. The amount you can earn tax-free, that £12,570 personal allowance, is frozen. It's not going up. So what does that mean? It means even if you get a pay rise to keep up with inflation, the tax-free part of your salary doesn't change. The result is that more of your hard-earned cash gets pushed into a higher tax bracket. It's a kind of stealth tax, which makes it more important than ever to be sure your payslip is spot on. But that's not all. Here's where most people go wrong. They just accept the tax code they're given without a second thought. But you don't have to do that. Let's jump into section 2, and I'll show you a simple 5-step guide to taking back control. I promise, this isn't complicated stuff, and spending just a few minutes checking this can literally save you hundreds, maybe even thousands of pounds. Okay, let's break it down. Step 1, your starter form. You've got to be honest on this, especially about any other income. Step 2, get logged into your personal tax account on the gov.uk website. Think of it as your personal tax dashboard. 3, scan that first payslip and find your tax code. 4, double-check for any weird adjustments. And finally, step 5, keep an eye on it every month using the HMRC app. It's like your personal early warning system. Now, this table shows you exactly how your income is taxed. It happens in stages. You don't pay a single penny of tax on the first £12,570 you earn. After that, you pay 20% on the next chunk of your earnings, and the rate climbs from there. It's a progressive system. And don't forget, on top of this income tax, you'll also see national insurance deductions, which for most of us is 8% on earnings above that same $12,570 starting line. Okay, here's a pro tip for you. Running your numbers through a simple verification check can be a real game changer. Let me tell you about a client of ours, Sarah from Leeds. Her new employer didn't get her previous earnings for the tax year right. The result? By December, she had overpaid her tax by £1,200. A quick 5-minute check would have spotted that on her very first payslip. Now let's look at the next step, because let's face it, for many of us, the 9 to 5 is only part of the story. HMRC's own data shows that 1 in 5 UK workers now has a second income. This is just the new reality, but it brings a whole new layer of tax complexity that can easily lead to overpayment if you're not careful. And this, right here, is the silent payslip killer, emergency tax. If HMRC isn't quite sure about your previous earnings, they'll pop you on a temporary emergency code. This basically means they tax each payslip as if it's your only income for the year, completely ignoring your annual tax-free allowance. The result? You pay way too much tax. For example, a client in Cardiff on a £55,000 salary was overtaxed by £2,100 in just 3 months because of this one simple error. Now stay with me, this next point might surprise you. where you live in the UK can make a real difference to your tax bill. As this chart shows, someone earning £50,000 a year in Scotland pays over £350 more in tax than someone in England or Wales. Why? Because Scotland has its own different tax bands. So if you move, you absolutely must tell HMRC your new address, or you could face a nasty surprise later.
So, how on earth do you manage tax with two PAE jobs? Well, typically HMRC gives your entire tax-free allowance to your main job. This means your second job gets taxed from the very first pound you earn, usually at what's called the basic rate or BR. To avoid any nasty surprises, it's a really good idea to just do a quick check every few months. Add up the income and tax from both jobs, make sure you're on track and you're not over or underpaying. This simple step puts you right back in the driver's seat.
Okay, we're going to completely shift gears now. We've talked all about being an employee, but what if your new job is running your own show? Making that leap from employee to entrepreneur is incredibly exciting, but it completely changes your relationship with tax. So let's look at the crucial first decisions you've got to make.
This is often the first big question you'll face. Should I be a sole trader or should I set up a limited company? As you can see from this little comparison, at £55,000 profit, the sole trader actually takes home more pay. But, and this is a big but, the limited company offers huge advantages if you want to reinvest profits back into the business or make really tax-efficient pension contributions. That decision point usually hits right around that £50,000 to £60,000 profit mark.
Okay, so once you've picked your structure, it's time to get practical. This section is all about the essential tools you need in your new business tax toolkit to manage everything and maximize your profit.
And this is one of the most important questions for any new business owner. What can you actually claim as a legitimate business expense? So many new entrepreneurs leave thousands of pounds on the table just because they don't know the rules. We had a cafe owner in Salford who was able to claim an extra £6,200 in her first year once she understood what was allowable. That's a huge difference. So, what's on this checklist? Well, you can claim for things like your home office costs, a percentage of your phone and internet bills, and business travel at 45 pence per mile. You can also claim for professional training, new equipment, and even some of the costs from before you officially started trading. The absolute key to all of this is just to keep good records of everything. Here's another fantastic pro tip for new businesses. If your turnover is below £150,000, you should seriously consider using cash basis accounting. It is so much simpler. You only record income when the money actually lands in your bank account and expenses when you actually pay them out. It's a brilliant way to simplify your bookkeeping and really help your cash flow. Whew, we have covered a lot of ground, from that very first payslip all the way to your first business tax return. So let's bring it all together and really focus on the most important actions you need to take to build up your tax confidence. If you only take away 3 things from all this, please make it these. First, and this is the big one, verify your tax code the second you start a new job. Second, whether you're an employee with a side hustle or a full-time business owner, track all of your income and expenses meticulously. And third, if you are self-employed, please take the time to choose the right business structure from day one. And this really is the bottom line. The goal isn't to somehow avoid tax, it's about paying the correct amount. Taking control, checking your details, and understanding the rules, it's not about paying less, it's about paying right. It completely transforms tax from something that's a source of stress into just a manageable part of your financial life. Now look, we know this can feel pretty complex, and everyone's situation is unique. So if you have questions, or you just want an expert to look over your numbers, the team at Pro Tax Accountant are ready and waiting to help. You can reach them directly on WhatsApp or by phone at 07985 689912, or you can just drop them an email at info@protaxaccountant.co.uk. And finally, if you found this guide useful, please do us a favor and subscribe to the Pro Tax Accountant YouTube channel. They are regularly posting more practical, jargon-free guides just like this one to help you stay in complete control of your finances. Thanks so much for watching.